Are you saving your money in the right savings environment? Well, by the end of this video, I hope you'll be able to answer this question. My name is Carmen, and go ahead and subscribe to our YouTube channel and hit that notifications bell so that you can be notified every time we post new videos. So let's go ahead and jump into the very first point that I want to make today, which is, what is the purpose of your savings? Before we even talk about the accounts, let's make sure you understand how to use your savings most effectively. The first option that you have for your savings is that your savings should be what helps you get out of unexpected expenses, right? If your car breaks down, if you need a new furnace, if you need a new roof, whatever the case may be, you have funds available that you have strategically planned for to pay for unexpected expenses, because that's just life. Right? So the next option that you have for your savings is for investing. You should be utilizing your savings to make more money so that when you retire or decide to do whatever you decide to do, stop working and travel the globe, whatever you want to do, you have those funds available and you know that you have cash flow coming in to sustain your lifestyle. Now let's talk about the savings mechanisms for the unexpected expenses. We typically store those funds in like a regular checkings account at the bank or maybe a money market account because we want to get as much interest as we possibly can. And you have to note that this isn't where you're going to store all of your money, right? You shouldn't have 20 grand just sitting in the account. When we're talking about unexpected expenses, we're talking about like maybe $2,000. Less than $5,000 should be in a savings account, because every time you have money that is sitting, that is money that is not making money for you. So really the unexpected expenses is where you're going to be parking a small amount of capital inside a savings account at a bank because you need that money readily available should something happen unexpectedly, right? What we've been talking about this whole time. Now, when we think about more money that you should have access to, that needs to be in a different account, not sitting at the bank. It should be money that is out making money for you. And what we always recommend putting larger lump sums of money is inside a whole life insurance policy. Here's why. Two reasons. One, if you put your money inside a whole life insurance policy, that money is going to grow at a tax-free compounded rate, and you get a death benefit because of the money that is inside that policy. Now our money is doing two things at once. It's providing stability for our family from that death benefit, and the money is growing at a compounded rate. Additionally, we have those funds available to be able to use should we decide that we want to invest. We have that money available if the unexpected expenses are more than $5,000, for example. You can easily request some money and have it deposited in your checkings or your savings accounts so that you can use it. And you don't have to worry about liquidating funds, paying penalties, begging for a loan at the bank. You have that money available to you, and it's just inside of a different environment. So that's why it's important for you to understand what is available to you and how to most efficiently use your savings, because typically as consumers, we're just taught to put our money in a savings account or a retirement account. Now, that's a whole nother topic. Putting your money in a retirement account is not saving money, right? I want to make sure we're all on the same page, because what we were doing, right, when we were working in corporate America, we were putting some of our income over into a retirement account, and we were calling that like our savings. If something came up, we would borrow from the retirement account. But these days, it's really difficult to borrow from your retirement accounts because of all the stipulations that the custodians make with retirement accounts. And for good reason, right? Because your retirement account is not for you to be dipping into because you didn't plan for those unexpected expenses. Your retirement account is supposed to do one thing: sit there, and not supposed to be there for you to touch it. That's why we cannot rely on a retirement account as a savings function for us, because the money really isn't readily available. And that's why we prefer to use something like a life insurance policy, whole life specifically, to be able to have money available to us at our discretion, and we can easily invest or easily get a loan from our policy to pay for our life or our lifestyle like we talk about. So if you are interested in how this works and being able to apply these same principles to your life, then go ahead and click on the link below. We would love to serve you at the Wealth Nation team in hooking you up with a life insurance policy designed for cash so that you can have the money available to you. The other thing that I want to make sure that we talk about, like I know the video today was talking about best savings accounts. I honestly, in my opinion, don't think that there is just one savings account that's out there, because we know at the banks, we are subjected to really the instability of the banking environment. I'm not saying anything's wrong with it, but banks do tend to close their doors. And I personally don't want to keep a ton of money at the bank knowing the volatility that the banks have. In addition, people can talk about the FDIC insurance. Yeah, that's great. I can be insured up to $200,000, or I can take that money and just put it into an insurance policy and know that I have the guarantee of the payback because the insurance company alone guarantees that in their contract. And that money can be earning a higher rate of return as it's compounding and provide me with a death benefit and be free of taxation because I'm putting after-tax dollars into the account. These are all things that you should be able to comprehend and apply as you start making more money and understanding where should I put my money. So like I said before, I'm not going to recommend a specific account at the bank. What I'm going to recommend you do is that you hone in on the purposes of savings. And the first thing is unexpected expenses. And the next thing is to grow and sustain wealth. So your unexpected expenses should be an account that is accessible to you, and the rest of the money that you are growing should be able to earn a compounded rate and be accessible to you so that you can use that money to invest. When it comes to savings, I can't stress how important it is for you to prioritize paying yourself first, because this is going to be the difference of you having money available from retirement and you scrambling at the end of retirement trying to figure out, what did I do because I didn't plan for it? So this whole video today that I made for you is for you to start thinking about your future self and the needs that you will need when it comes to retirement, because you have to think about taxes and you have to think about inflation. And if you're just stockpiling all of your money in a savings account and hoping that it's going to turn into something one day, then we're behind the 8 ball. The other thing too is to note that if we're taking our savings and just immediately putting it into an investment, we're not protecting the principal at all. So a lot of times what happens is you see individuals get to retirement and realize they don't have the money available because it just went poof because of an investment, right? A bad investment opportunity, the market went down or the market went up, whatever the case may be. You always have to think about protecting the principal. And that's why, again, we recommend a whole life insurance policy, because you can utilize the cash inside the policy, put it in investment, and then when the investment makes its return, you can put it all back inside the policy. And that grows the policy tremendously, and that grows your death benefit. So you're doing 2 things at once. So again, if this is of interest to you, then definitely click on the link below. We would love to help you and understand what your financial goals are so that we can design a policy that fits your specific needs. So if you would like to see how we put our policies into action and utilize the policies to create cash flow, then definitely watch our next video. And don't forget to own your own lifestyle, or someone else will.